Hey guys, David Robinson here. Welcome to the apartment investing journey. Another great episode for you today. I'm excited about our guest because I think he's going to have some insights for us as it relates to underwriting as well as asset management and acquisitions on multifamily. Charles Seaman, welcome to the show. Appreciate you coming on.
Hey, David, thanks a lot. Appreciate you having me on.
Yeah, my pleasure, my pleasure. So Charles is a native of Brooklyn, New York, that currently resides in Charlotte, North Carolina, and he serves as Senior Acquisition Manager and Asset Manager of Three Oaks Management. He actively works to locate high-performing multifamily real estate deals throughout the southeast region of the United States. So, obviously, a very brief bio overview of your world, Charles. Our podcast is all about the journey. And so we'd like to back up and just talk a little bit about, this journey that you've been on over the last handful of years and how it all started for you.
You know what, David? It's probably a little bit different than most people. I can't say that I actively sorted it out. It more so came to me. And what happened is at 20 years old, I was in need of a job and I wound up working for a guy who was a successful commercial real estate investor, amongst other things. And eventually my role there expanded to include managing all of his different properties and businesses. And of the different industries he was in, the commercial real estate side was always the one that I gravitated most to and the one that I wanted to be in. I also knew that I didn't have the financial wherewithal to go out there and buy commercial real estate myself. Still working on getting to that point. But fast forward a bit, I went down the line and said, after being there a little more than a decade, my intent was always to go out and start my own business. And sometimes in life, you kind of get lost. And I started making more money. I started gaining more responsibility in my professional occupation. And I wound up staying there more years than I ever initially expected to. So after about a decade, I started looking at single family because I knew that even though I wanted to be in commercial, I didn't have the budget for it. And as I started looking at residential and single family, I was looking at potentially buying holds and also wholesaling. And I determined two things. One, I really don't like the residential side as much. And two, I didn't have the skill set for it. It's not that I couldn't have developed the skill set, but I already had a skill set that was geared for commercial real estate. So I took a step back from that, fast forward a year, and then I discovered syndication for the first time. And that piqued my interest right away because I said, I can go out there and do the types of deals that I want to do. I can use the skill set that I have, and I can use other people's money. So I said, okay, this works really well. So that kind of brings me to where I am now, and then full time in syndication.
Love it. Love it. So, talk to us about those 10 years briefly with I assume he's more of a mentor, maybe as a boss or whatever you want to call him. Obviously, you learned a lot during those 10 years, managing his businesses and his real estate. What were some key takeaways that you were able to take away from that decade of experience with that commercial real estate investor?
There were definitely a lot. And you're right, in addition to being just a boss, it was definitely a mentor type relationship. Probably a lot of tough love in there, but it was good learning. And, there's a few things I took away from it. So one is that I got to work very closely with the guy who was very successful. And I was involved in every aspect of the deal with him, finding deals, negotiating them, reading through contracts, finding tenants. Some of his properties were more traditional commercial than multifamily. So I got a little bit of experience with both managing properties and not really selling because he was more of a buy and hold guy, but pretty much everything from finding and negotiating to operating properties. So I really got the full gamut there. And then in addition to that, another thing that I also got was a lot of good contacts, which, still keep in touch with a lot of them to this day.
Yeah, I bet. And this was in in New York, is that correct?
Correct.
Okay, great. And when did you make the move to North Carolina?
June 2019.
Okay. And is
So
that about the same time that you started your syndication business or discovered syndication?
So it's actually 2 years later. So I
Okay.
started the syndication business very part time, about 10 to 15 hours a week. I was working on it for about 2 years. And a couple of things happened. One, hadn't closed my first deal yet. Looked at a lot of deals, put offers in, flew to different places and toured properties and met people, but I hadn't actually won anything. So after about a year and a half, I said to myself, well, what do I need to do to actually get a deal? And I'm not sure this was the only answer, but it seemed to be the right answer for me. And I said, well, I think I need to move to the target market, put myself right in the center of it, and I need to go out there and be more present and be more active. And I can't just do this 10 to 15 hours a week. Now, let me be clear for anybody listening out there, you probably could land your first deal while you're still doing this 10 to 15 hours a week as a side hustle. For me, I found it a lot more effective, and I thought it would help to expedite the process by diving into it.
Yeah,
So
makes a
that
lot of
was
sense.
my thought process.
Well, and just to give us some context and to bridge the gap a little bit, you spent 10 years, working in property management, managing property and businesses for the commercial real estate investor that you were working with. Then you decided that you were going to go and pursue single family, but during that process realized this isn't the right path for me. What were you doing in 2017 when you were focusing or looking for opportunities in the syndication space, large commercial multifamily deals for 10 to 15 hours? What else was taking up your time? Were you still working with that mentor, or had you moved off and started doing single family? What were you doing?
No, so at that point, I was still working a full-time job, the same one. And most weeks, my work schedule was probably 60 to 90 hours a week.
Hmm.
So a lot of times in the past, I hadn't really taken lunch breaks or anything like that. It just wasn't the culture that we worked in. But once I started getting involved in syndication, I said, okay, I made it a priority to take some time at least during the afternoons.
Hmm.
And what I would do with those little breaks in the afternoon, sometimes they'd be 10 minutes, sometimes 20, sometimes 30, whatever I could get. I would schedule a phone call so that way I had a purpose when I went on those breaks. And I would use them to speak to brokers, speak to attorneys, speak to lenders, and speak to whoever I needed to speak to that would help me make some progress that day. And most times they wind up being brokers. And that's probably how I kind of wind up on the acquisition side of the business. So, my purpose was using that time productively to speak with as many people as I needed to make things work. And, what I would do is at nighttime when I would get home, most nights I'd be home, 11 o'clock at night, sometimes a little later even. And my thought was, okay, I have to make all my phone calls during normal hours because nobody's going to speak to me at that time. But, if I get home at 11 o'clock at night, who cares if I underwrite a deal at 1 in the morning as long as it gets done? So my thought was, okay, it doesn't really matter for things that don't require other people. I can do them on my own time. So that would be kind of my nighttime and sometimes part of my weekend stuff. And I would use that until I figured I had enough momentum to go full time.
So here you are, spending, what time you could on the side, talking with brokers, networking, and underwriting and analyzing deals, but struggling to really, get the ball headed in the right direction. You then decided, what, I'm going to make a move, hundreds of miles away, head into warmer weather and move down to North Carolina. What, obviously you mentioned that you wanted to be, move into the target market that you were interested in, be in the middle of what was going on and be more active. From a strategic and a practical perspective, did you leave your position with that company? And what allowed you to be able to make that dramatic of a move?
So I did wind up leaving my full-time position. Ultimately, I wound up working out a deal after about 2 months to do some work remotely on a part-time basis for them, which worked out being a good thing, I think, for both sides because there were some gaps that they needed filled, and it also provided me with consistent income as I continued to spend a lot more time on the syndication business, not realizing initially how long it would really take me to start making a full-time living off that. But the good news is almost right after I moved down, we wound up getting our first deal in the contract. So I said that wound up being good timing. And it gave me a lot more time to focus on that because I thought about it and said, boy, if I was doing this while I was working a full-time job, this would have been tough. And
Hmm.
there's a lot of moving parts. There's a lot of administrative work. There's a lot of phone calls and follow up on the investor side. So it's like, okay, this really becomes time consuming. So you need some good effort to put into it at
Yeah.
normal hours of the day.
Yeah, yeah,
uh,
for sure.
and then your second question, uh, the truth of it is, I probably didn't fully think it through as much as I should have. I got the idea in my head and I committed to it and said, okay, I'm going to make this work one way or the other. And it wound up being the other. So it was okay. You get down there and, have a high level picture together and put the pieces together afterward.
Yeah, understandable. Sometimes that's what it takes, right? You got to
Right.
commit fully to make those things happen. So that's great.
Yeah.
So let's fast forward a little bit and let's talk about what your business looks like today.
Sure.
Tell us a little bit about your business.
So the good news is the first deal was closed in 2019. And let me paint this picture for everybody out here so you understand. So there's a lot of truth that the first deal is always the toughest because you're going to be going through a lot of deals. You have to build track record. You have to establish yourself as a credible figure in the industry. And there's a lot of work and a lot of effort that goes into finding deals, especially in the competitive market we have nowadays. So the first one took about 2 years. The good news is the second one took only half the time, just 1 year. In actuality, we had it under contract within about 4 months of closing the first one, but then the pandemic hit and we had a little bit of a delay closing it, so it slowed our process down. But fast forward, about 2 years later, where we are now as we record this, and now we have 5 deals. So what happens for anybody out there is, as your track record builds, the first deal took me probably somewhere between 150 and 200 deals to find. So after you close the first one, now we're probably somewhere in the 30 to 40 deal range before we actually get something. And there's a few reasons for that. One is you get access to different deals that you wouldn't have had access to when you first started out. And that's the same thing even on the investor side. So as you're starting out, certain people aren't going to take you seriously. And because of that, they're not going to give you good deals. They're not going to want to invest for you. But as you start showing credibility and staying power, people say, okay, this guy's the real deal. And then they start wanting to invest for you and start wanting to give you good deals. It's almost like they want you to win because you winning helps them win.
Hmm.
So it becomes a reciprocal arrangement, from the brokerage standpoint. They make money by connecting buyers and sellers. So they don't want to give a buyer a deal that can't close because then that looks bad on them that they didn't do a good job screening those buyers. But now we have good broker relationships. We have a track record. So now we have brokers that actually vouch for us. We closed one deal this past summer, 130 unit deal, which to date is our biggest. And with that deal, it was an on market deal. It was one that we did not have the highest price on in the best and final round. And we really didn't have any significant advantage over the other group we were competing against. But the only difference is the broker knew us and they were able to vouch for us and they sold us hard to the seller. So even though we were lower on price and had no real significant track record advantage over the other competitor, we won the deal because the broker really sold us hard. So that's the benefit when you start seeing the work and the effort and the strategic alignment of things coming together. So as we record this now, we actually have 3 deals in the contract, which is definitely a first. So things definitely pick up speed as you start building your track record.
Hmm. Absolutely. And so, obviously, a lot of momentum in the latter part of the last 2 years.
Yep.
With that momentum, having 3 deals under contract, what does the business look like for you today from a partner and a structure perspective, and what you focus on specifically?
Sure. So in the past, I was really doing the acquisitions and the asset management. As we started to grow, I mentioned to my partners that, listen, guys, I can't do both anymore. It's going to come to a point where at least one of them is going to suffer, if not both. So we need to figure out a way to do one of the two otherwise. So we brought somebody in approximately 20 hours a week. We have an independent contractor that does our asset management. And we started that around September of 2021. And the goal was, one, to have somebody with the right skill set in there doing that, and two, to free me up to focus more on the acquisitions.
Hmm.
So I still have a little bit of involvement in asset management, but it's a lot less than it was a few months ago. And the goal was to eventually be, pretty much totally out of it and on the acquisitions. And then as we continue growing, I think eventually we'll probably have full-time acquisitions people as well, but we're still a little bit away from that happening.
Yeah. And you mentioned your partners. Are these loose relationships where you're partnering deal by deal, or have you formalized a specific partnership within your group?
Good question. So we have a specific partnership. I have two partners, Adam and Wayne Bolsinger. They're a father and son combination. Adam is the investor relations guy for our team. And yeah, for some of you who follow us, you may know we recently rebranded as Investor Boardroom. So that's us if you see us.
Great.
And with Wayne, he's a retired CFO and VP of finance with two different retailers. So he's more a financial and administrative figure in the business.
And how did that relationship come to be?
So in 2017 and 18, I had taken some courses with a one of the different companies out there, RE Mentor. And at one of the events, I met them, we had lunch, and we connected initially, so we decided to keep in touch. Then I saw them the next month at a different event, and I threw the idea out there and said, listen, maybe we should partner. At that point, I knew that I could see how much work was going to be involved in this business. And I don't think I even fully knew yet then, but I was starting to see more and more, okay, this is going to be more than I can handle working 60, 70, 80, 90 hours a week. So I threw the idea and said, listen, we could probably do more together than we could ourselves. So maybe it would make sense to partner. And they agreed. We started working together loosely for about 10 or 11 months. And then we actually, formed a specific partnership later in 2018 and just went from there. So we do have other partners that we work with on a deal by deal basis, but the two of them I work with on every deal.
Yeah, love it. And you mentioned that initially you were spending a lot of your time on both acquisitions and asset management. More recently, you've hired an independent contractor to really take the bulk of asset management off of your plate so you could focus on acquisitions. What do your other two partners focus on at this point?
Sure. So my partner Adam is investor relations. So his main thing is content creation. We find that social media tends to be our most effective way of attracting prospective investors into our funnel. So he's out there creating content on a regular basis, making videos, posting blogs, things that generate interest. And like with anything, right? It's always a moving target sometimes. So sometimes it's good to see social media engagement, but the question always comes, how do you take social media engagement and actually translate that into something monetized?
Yeah.
So, we're still working on that. It's a moving target and we're adjusting some things as needed, but he's been very active on that front. And then Wayne's really more administrative and he does more tax consulting and things like that because he was also an accountant in his younger days. So he's
Hmm.
more on the backside.
I see. That makes a lot of sense. Okay, so you have great division of responsibilities here, and you've really leaned into this acquisitions piece. Clearly you're doing a great job because here you are, with 5 deals more recent completed and 3 under contract. So what are the tricks to sourcing deals at this point? I know you have already alluded to how important broker relations are. Are there any other strategies, or is it really just that simple? Hey, you've got to build these relationships with the brokers.
So if you're looking at deals that are, let's say, larger than 50 units, I think you're really going exclusively through brokers. If you're out there and you're looking for multifamily in the 2 to 50 units, you can probably have a lot of success with direct to seller outreach. If you're doing direct mail, if you're doing Facebook ads, different ways of connecting with sellers. But most times, if you're buying a 100 or a 200 unit property, eh, I'm not going to say you could never have any luck reaching out to a seller. You probably could, but I would tell you that your odds are much slimmer, and they're really going to go exclusively through brokers, pretty much.
Yeah.
So for us, what I always tell people is that there's a handful of brokerage firms that control the multifamily and really the commercial market as a whole. And the sooner you can build relationships with those firms, the better off you'll be. There are some smaller boutique firms in certain markets that can be good, but the reality is a lot of the smaller boutique firms, even though they want to get in the space, they often struggle to because the larger firms just have so much market share. It's tough to
Hmm.
compete with. And when you're looking at sellers, a lot of times they might be institutional sellers. They want to go with the big name brokers that they know and trust. So the sooner you build those relationships with the bigger brokerages, the sooner you'll have access to deals that most likely you're chasing.
Yeah, absolutely. And, you know, we often hear this concept of building relationships with brokers and how the brokers are the gatekeepers, and there's only a handful in each select market that do the vast majority of the business. How does one, in your opinion, that may be on the outside of, you know, the preferred buyers list for the broker, work their way strategically and effectively to be on that preferred buyers list?
So one thing that definitely helps, and I'm not going to say this is an end all be all, but it helps, is to be likable, likable and relatable. Because the thing is, a lot of times if these guys are dealing with institutional sellers, they deal with institutions because they know they can close. There's no question on that. But some of those guys aren't always the most pleasant to deal with.
Mm,
So if you can differentiate yourself and become likable and relatable, that helps. Now, will being likable and relatable get you a deal in and of itself? Absolutely not. You also have to be credible. So there's two things you can do. So this business is totally 100% a track record business. So there's two things to do. One is to go out there and find somebody else who you can work with and use their track record until you have your own. Or two is you can go out there and start building your own. And both are good methods. The faster option is probably going to be using somebody else who's already established and getting their track record and working with them. But the other way is just being consistent. And that goes a long way, because what will happen is with that consistency, eventually the brokers will start to take you seriously, because they'll say, okay, this guy's looking at all the deals we put out. He's putting offers in on a lot of them. He's coming back to us. He's touring properties. We start to take you more seriously. One thing I did this past Sunday was our best broker relationship we took to a Carolina Panthers game. And we were hanging out at the game. We were just enjoying it. And while we were there, we were also talking about some different deals. So, right now we're in the running for a 292 unit deal, which would be our biggest to date. And we're sure making a run to try and win it. And, we were talking about it and saying, my partner had asked him, what do you think our odds of winning it are? And he said, well, listen, a year and a half ago, I would have told you zero, because we wouldn't have taken you seriously. At least not for a deal that size. They would have taken us seriously on a 50-unit deal, but not a 292-unit deal. And, since then, we've put a lot of offers in. We've made some strides. We've closed more deals. So all we've done is be consistent. We show up when other people aren't willing to show up. So simply by doing that, you'll separate yourself if you do it enough.
yeah, absolutely. Great insights. Thank you for that. Well, look, we got to start winding down here. I've got a few final questions for you before we do. The first one is, what's the biggest challenge that you face today in your business?
The biggest challenge for us, I would say, is finding investors. So that right now is our weakest point. It's something we're working on strengthening, and I think there's a lot of good momentum, but it's been our biggest challenge to date.
And do you have any ideas on how to overcome that challenge at this point?
So I think we do. I think we have better ideas than we did in the past, and I think the social media engagement and the content will certainly help and start leading to more people funneling in. Initially we were tapping into our personal networks, which what you quickly realize is that you tap into them and you tap out of them pretty quick, unless you have a killer network. So we're working on finding ways to expand our networks and just bring new people into the fold that we don't have currently.
And so the 5 previous deals that you've closed on, those have all been mainly the equity side. The investors have mainly come through personal relationships.
Personal relationships and also other partners. So some of the key principles that we've worked with have also brought investors in. So that's been very helpful, and that's been a big part of it also.
Yeah. Is it a viable model for you guys moving forward to continue to partner with co-GPs or key principals that can continue to bring equity to the table? Or do you see yourself wanting to get to a place where you can raise all the equity for your deals personally?
So the long-term answer is to get to a place where we can raise all the equity for our deals personally. but we're probably still, I would estimate about 2 years away from that. So good relationships are always important because you need to have the right partners, the right key principals that are able to do that. And right now we have one that we've been working with for the last couple of deals. We have a good working relationship. Basically, we find the deals, we run the deals, and he funds them. I joke around and I say, listen, we'll line them up, you knock them down.
Yeah, love it. Well, it's definitely a team sport in this space, and having those relationships is critical. The next question I got for you is, what's going really well in your business right now that we could all learn from?
Well, I would say what's going really well is deal flow. We have a lot of deals coming in. I think one thing that's helped us, and this is very cliche, you'll hear this probably on a lot of podcasts and a lot of people, picking a target market helped. Some people like to listen and to learn easily. I tend to be stubborn as a mule, and I learn the hard way. So even though people told us pick a target market, I didn't quite listen. The first year we were doing this, we were looking at anything east of the Mississippi River, which if anybody pulls a map out, that's a lot of ground. So one month I was in Ohio, another month I was in Indiana, twice I went to Kentucky. One of my partners went to Tennessee. And after about a year, we got smart and said, okay, we need to pick a target market. And the reason that helps is there's two distinct advantages you get from having a target market. The first is the market better. So the downside to looking at deals all over the place is that you're constantly spending time educating yourself on the market because you just don't know what you don't know. So you have to learn all the metrics. You have to learn what employment options does the market have. What are we seeing in rent trends? So there's a lot of time that you don't have to spend if you're looking at the same markets over and over again. And the second thing is you don't get the advantage of building good relationships. So you'll never build good relationships if you're always the new guy in town. So by being in the target market, which for us really is the Carolinas, and we've expanded it to include Florida, Georgia, and Tennessee, it gives us a chance to keep everything localized and to have the ability to touch all of those relationships on a regular basis so we can keep nurturing those relationships and getting deal flow from them.
Yeah, makes a lot of sense. Well, Charles, I've enjoyed our conversation. I appreciate you sharing, your journey, how you got started at 20 years old working for the commercial real estate investor, and spent, over a decade with him, and then decided, it's time for me to sort of spread my wings and go carve my own path here, and started going down that single family path, mainly because you felt like it was accessible, even though commercial is what you knew. But you quickly made a pivot, realized that, hey, there is a pathway for me to get involved in the commercial real estate side, even though I may not be able to bring the equity to the table. You learned about the syndication model and how you made a big change in your life and moved yourself hundreds of miles away down to North Carolina from New York, and ultimately have had great success over the last 2 years, closing out 5 deals with 3 more under contract. And so thanks for sharing your journey with us and some of the key insights to building broker relationships and, making your way from being out of the market into the market and then a player in the market. And so I appreciate that. What's the best way for our listeners to connect with you and learn more about what you have got going on?
Sure. Give you 2 ways. First is you can go to our website, investorboardroom.com, or the second is you could just send me an email, charles@investorboardroom.com.
And Charles, real quick before you go, tell everybody about your Zoom call where you underwrite deals on a regular basis.
Absolutely. So every Saturday, 4 p.m. Eastern, I host a free underwriting session on Zoom. What we do is we take an actual multifamily deal. Some of them are deals that I find in my deal list, and others are deals that are provided by some of the attendees. We go through a deal each week, and we walk through it from top to bottom to go through a comprehensive review of each of the deals and how we normally underwrite them. So if anybody's interested in that, you can reach out and just let me know that you heard me on David's podcast, and I'll be glad to add you to that list.
Okay, awesome. Well, Charles, thanks again for coming on the show. I appreciate you sharing your journey with us, and I look forward to connecting with you again soon.
Thanks, David.